Wednesday, February 19th, market analysis. Stan Ehrlich, good morning. 9:42, actually, a few minutes earlier than 9:45, which is usually when I try to start. Sometimes it's a little after 10. I always start out with the stock market indexes and go to the futures markets and sometimes some other topics like cycles, or a variety of things. All right. As you know, I've been watching very, very closely the stock market indexes for the last few days, in particular, because they are going sideways, which is very unusual, not common at all, and leads me to believe that very soon, any minute, any day, this week, we could have a very sharp rally, and that I'm in favor of the downside, a sharp break. Now, the market's waiting for something, tell you that. Here's the reason why I'm looking for a break instead of a rally. But if it does make a new high, especially in a closing basis, especially with higher volume, a classic bullish breakout, I'll flip immediately to being bullish and talk about how much higher I think it'll go, etc. But not yet. Here's why. Beginning of December, overbought, top broke down some, rallied back, couldn't make it into new high ground late December. Made minor new lows on the E-mini January 13th. Didn't stay there, hit support and got oversold, and I had another good bounce. But this time it came very close to making a new high, but it couldn't do it, didn't do it, got overbought and pulled back. Tried it again, couldn't do it. A little pullback. Now it's trying it again. Why not another pullback? This is a significant resistance area that's proven itself a few times since the beginning of December. If it's broken, I'll get bullish very quick, immediately. But that's not what I'm expecting. I think we're going to see it start to break below the lows of the last few days of trading. And in this particular case, lower than Friday's low and yesterday's low. That would start something on the short side. I believe some downside momentum should start to build when that happens, if that happens. And that means you can get down below, let's see here, on the 1 minute spider E-mini 6118. You get below that, and I think it's going to start to cascade down more. The same commentary in general for the S&P 500, SPY, but it did make new historic highs in the last few days, and it stayed there, but very lackluster, dull, boring, and that is not what a bullish breakout normally does. So we, in my opinion, are still hanging around this new historic high, slightly new historic high level, and not having the bullish follow through. So I think it's very susceptible to falling apart all of a sudden. And in this particular case, we have a high higher today, and it's a new historic high today, and it's a little lower on the day. And if we have a bearish engulfing, then I'll be a lot more certain. Well, never certain, a lot more confident, put it that way, that the break is starting. Next chart is the spider 1 minute, dipping back right back to these old highs, though, for the last couple of days and a fraction at the moment. So if it's going to be bullish, this would be about the spot that I would be interested in buying, but I can't come to that conclusion. Same comments basically on the spider as I made on the E-mini, of course. Now, the QQQ has barely made a new high yesterday, and today is flip-flopped right back down a little bit. Again, a doji inside day, not much going on here, waiting for something. This could turn into a double top without too much of a problem. And if that happens, the low between these two highs is, let's call it 500, a little under. And then we would have a downside objective of something in a ballpark of, I don't know, 470 or maybe a little lower. But if that starts, I'll be talking about more details on that. So let's see it start. Not yet. It's just sitting there waiting. And the QQQ 1-minute chart, very flat here. Again, unusual. NASDAQ futures, right up against the old highs, which again was middle to early December. And in this case, if we have a double top, the breakout to the downside is a 700, let's call it 20. Yeah, that's good enough. 20700. Below that would have another tumble to the downside. Now, I'm not saying a bear market's starting. I do think there's a chance of a 1 or 2, maybe 3-month downside correction in a long-term bull market. But that's the best I can come up with at the moment. Next, we're just looking at the NASDAQ 1-minute chart, big sideways. And this is about the most I can squish it with the 1-minute data. And what are we looking at? YM, Dow Jones, a little bit different market, along with the Russell 2000. It's different. We couldn't get even super close to the old historic highs, which again was early December. In this case, actually the last day maybe of November, but last week of November, first week of December. And it had a bearish engulfing sell signal that is so far the high of this move. But it's coming into a small, about 3-week pennant formation, getting squeezed toward the tip here. So it should break out one way or the other very soon. And I again vote down. And what do we got for the 1 minute? Close to breaking down, but it hasn't happened. What about the Russell? Same thing, sideways movement, but for a significantly longer period of time. This sideways movement has been since the middle of December. It was the early part of December, actually November 25th, that the highest high took place in overbought condition with an upside exhaustion gap at a resistance line at the top of a resistance level. I know I squawked bloody murder on that day, probably anyway, on November 25th, that could be a very important because of the gap, because of the overbought, because of the line, and because of the resistance area, and kaboom. Down we went, but we never recovered and rallied all the way back up toward that level. So the Russell will probably break down a little bit more quickly and significantly if everything starts to go to hell in a handbasket a little bit, not that much, soon. Next. Yeah, you're looking at the 1 minute and not showing us too much. Bonds are currently trading a little bit lower on the day. We still have a head and shoulder bottom with a minimum upside objective of 117.5 that hasn't been reached, although we came very close to it about 117 a week or so ago and had a bearish engulfing, which did work, but it only created a retracement back to the neckline, which was on the 12th of February, and then started to work our way back up. Now, this little 2 or 3 day dip here is okay. In fact, as long as it stays above the neckline, it's all right, but you're not really going to have too oftentimes a double test of the neckline. So I think we're going to turn up very soon. If that's true, it might bullishly affect the stock market indexes. I'm not sure about that. It depends upon how aggressively I think interest rate futures might rally. 10-year notes, same commentary. Support level below the market, looking for a turn up. And by the way, both bonds and notes, especially notes, have approximately a 1.5 year double bottom formation that is in the process of proving that it's a good formation. We cannot get too close to the lows that were made January 13th. And I believe that's the exact same day for bonds, January 14th. So, yeah. Okay. Now, in crude oil, rallying today, coming back up, support held pretty well last few days. I was unable to pinpoint that level as particularly important, but obviously it's turned out past tense to be important. And in the future, I'll be watching to see if the market holds there if we come back down again. So now I am looking for a rather nice rally, and it could very well be up to 78 and maybe even 80, 82. I do not expect it at this point to make it below 70.18, the low on Monday, or rather, yeah, Monday. Next, heating oil. Slightly higher, no big deal. Tiny new high, pennant formation. Recent trend, last few months, up. Probably going to break out to the upside. So I'm waiting for a breakout or some signal that we're about to have a significant move one way or the other. Right now, pennant formation means sideways. But I favor a bullish breakout. Natural gas shot through the roof yesterday and has shot through the roof again today so far. But it did stop at the top of the resistance area, 4.239-ish. It is currently staying right around that level. This would be a pretty interesting level for new shorts or maybe taking partial profits on long positions or watching for bearish engulfings or signs that the market is going to turn down, which I think it's about to do. Overbought conditions and fairly overbought 81. But look what happens when we've been getting up to about 80, 81. You topped out. Now, I'm not saying it turned into a bear move. I'm just saying for a few days or more. Again, it did the same thing. Again, it did a little late, but close to the timing, et cetera, et cetera, et cetera. So when you get into the 80s, the odds are getting very high that you're very close in time and price to a downturn. And that's where we are, plus the fact we're at a resistance level. Next. Resistance has so far been stopping this rally. We did have a bearish engulfing a few days ago. That was on Friday. Today we've actually been about 3 or 4 ticks higher than Friday's high, so that kills that reversal. Unfortunately, it did work for about sort of. There was a day trade profit for the scalp on February 14th. I can see that, but the other positions probably lost a little because it never had the downside follow through. Right now, I am looking at a minor higher high today than yesterday, and it's lower on the day. It could be topping out, even though it made a higher high than last Friday. Still, I think it's topping out. Next, silver, overbought, top of a resistance area, punched through it a couple of days ago, but miserably closed and tried to come back again today. We're back to the same approximate resistance level, top 33 and a half-ish, and it's flipping. Now, if we get below yesterday's low, we will have a red bearish ER sell signal, maybe as nice as this one right here, which went down for a week pretty substantially. And, a variety of others back here. And this one worked for a few days. Let's see what happens. It hasn't got turned red yet. So don't jump the gun, but I do think it's slipping and topping out, whether I get more red or not. New low for the break in platinum. Top of the resistance area, overbought conditions turned it down pretty darn good now. So it started out great with a big downside move on Friday, the 14th. And then we've got Monday, Tuesday, and today dropping, stable, and then dropping again today. I've been mentioning 977, and we're getting awfully close. So my first significant support area is almost being hit. If that doesn't hold, and there's a chance we're getting a little closer to oversold, but if it doesn't hold, then I'm going to be talking about 957, and frankly, maybe a significant amount down from there, 940 and even lower than 940 maybe. Still bearish. Now, what about high-grade copper? We got the top of the market to the exact day with a red bearish ER sell signal. Yay! This is doing very nicely today. It's so far doji, no higher, lower than yesterday. Currently down on the day a little bit, but we're trying to bounce off a little support here at 4.54-ish. And so far, so. If it bounces more, I don't expect much. I do expect it to drop into the support area. I do expect it to come down to 4.45 and maybe even lower than that pretty soon. Nowhere near oversold, very neutral at 51. Next, soybeans, oil meal. Now, here is a long-term potential bottom building I've mentioned many, many times. And the last few months at least. Several probably now. maybe a double bottom brewing in soybeans, maybe another bigger formation brewing. But my expectation about a dip has, well, at least halfway came true. It failed to break out in the new high ground and failed to break out of the double bottom formation, and that on that date of February 5. So a little pullback, okay. When we get on a closing basis above February 5, and the real key is actually the date of September 30th, but that's only a couple of pennies higher than February 5's high. Then we have a double bottom that's going to break out to the upside, probably, and going up to at least 1187 for the minimum expected, not guaranteed, upside objective. It's a simple count from the highest high to the average price between the two lows, or you can go to the lowest low price, and then you measure that distance up from the highest high, straight up, and you get the objective. In other words, the depth of the formation you use to measure the next leg up. It's like stair stepping its way. Next, soybean oil, a new high. Now for a while, getting a lot more interesting. This is a new high since November 12th. It did it a couple of weeks ago, pulled back some, no damage done. Now another new high today, but a little bit overbought and lower on the day. So we might even have a bearish engulfing, in which case we're going to turn red, but I doubt it, but it could happen. And minor high here, another minor dip, I believe. I'm expecting at the most 44.00, maybe a little bit lower down to 41.30-ish, but probably not even that much. I am looking for new highs soon, maybe the next few days. Just because it got overbought today doesn't mean it's going to stop rallying. Sometimes the overbought condition lasts for actually weeks. I've seen it be over a month. Very rare, though. Usually it's within a day or 3 or 4. Then it rolls over. And that could be a little higher. I'm bullish, but overbought at the moment. Maybe a minor correction. And soybean meal. Now, this is the worst of all. It's still near its lows. It has not yet started to make new highs for any significant amount of time at all. So meal is really the last one to show any longer term bullish start, whereas some of the others already have, but they didn't necessarily break out of major bottoms yet. So meal, get going to the upside here real quick and keep going up. Next, corn. New highs since June or late May in the last couple of days. That's looking great. Now, what we've got is a head and shoulder bottom that has worked past tense already. That objective was about 494. It was fulfilled on January 23, a little dip, minor new highs, and now we're making new highs for 2 or 3 days in a row and basically staying above those previous highs, which is constructive. Not overbought. Looks like this thing can keep chewing its way higher. Next barrier is 513. I think that's going to get broken. Then I'm looking for something in the 560s. Next chart. We have new highs for a while in wheat, but it started to get overbought on Monday again. And no surprise, we have a break today. Almost a bearish engulfing, not quite a sell signal. So I think we're going to dribble down here to maybe 567 in the short term. Only a week or two of dip, and maybe even less than that. I'm bullish. Minor dip here, should end up making new highs soon. I like what I see. This is a potential broad double bottom formation from August of last year to January this year. The major breakout is at 634, and the objective then would be 740-ish, 738. Next chart is cattle. Been making new lows. We did get a sell signal. It worked great, including ER3, ER1 as well. Too bad it wasn't the highest high or the high day of the trend, which I certainly do pick often enough with these ER signals, the red and green bars, candlesticks. It's custom coloring, obviously. Yellow means caution, it's overbought, or on the downside, oversold. And then red or green is an official ER signal. And they don't always work, but they do have very low risk, minimized tight stops, minimized risk. Okay, should be getting close to bottoming out. We are also close to oversold for cattle. Miss Piggy now finally has a big break. She was getting up toward this resistance area late last week, poked away at it and couldn't follow through. Had a relatively poor close yesterday, albeit higher, but after trying to make new highs for the move, closing that poorly is not a good sign. And kaboop, back in the pig pen today, new lows for 4, 5, 6, 7, 8 or so days, and down quite a bit. So no surprise. Now, where is it going? Probably back down to at least 86.90 and maybe even 85.60. Next, XYZ, the only stock I've been following now for a few months, in a support area, trying to bottom out, not doing the best job of it yet, looking for more evidence that it's bottoming out. There's a chance it could break down here if the stock market indexes do what I think they might do. It could fail and drop down a little bit more, one layer lower, so to speak. But I think still the longer term picture is because of this 2-year bottom that it has broken out of and basically held on dips in the support area, which is a massive one, 2 full years. Really good. Consider this stock was, well, right now it's around 83, and it was trading close to 300 only, what is it, 3 years ago. So I think there's a lot of upside potential. Going back to the E-mini, I see we're just basically filling around here, not doing too much of anything momentarily. You guys have a great day and profitable. Okay, yeah, and profitable trading to you.